Did you know that even if your company deducts TDS perfectly and files GST returns on time, a simply professional tax default can still attract penalties and notices from the state government? Yes, in this video, I will explain the complete Professional Tax Act in simplest way as much as possible. Welcome to my channel. Today we will discuss about this Professional Tax Act as per the state articles 276. So we have an updated updates till to June 2020. Okay, the articles constitution on constitutional basis it has a form of this one. In this, we will cover the applicability of this act and what are the slab rates. Maximum per year is 2,500, and the registration and who has to take the registration, who have to take the registration and the returns or monthly or annually, what are the frequency of the returns, and if what is the penalties if you default this, and for each state there would be different rates under this, so we can check what are the states applicable and what do not, and who will file the returns and what are the slab rates for the each state. So we'll start this. What is the professional tax? Professional tax is directly levied by the state governments under the article 276 for the individuals or companies or trades who are earning the salary income or from professionals or tradings, whatever it is. It is not a central government tax. Okay, each state or union has its own rates and own slab. I hope you understand until this. So it is subject to the state articles, and the maximum cap per year, maximum for each professional tax, either person or company, need to pay only 2,500 per year, maximum per person. So enrollment as a collector, I mean, if you are an employee, your employer, I mean your company, will take the registration PT on behalf of you, and they deduct that PT from you from your salary, and they will pay it to them, to the state governments. And also self-employed also need to pay the PT registration, PT payment, but that will pay on their own. They do not any employer on this. This is the summary where professional tax will affect. So we'll jump into the who will liable for the professional tax. First of all, the main importantly, salaried employees, all employees who are earning salaries or wages, whatever it is, it is more up to 15,000 or more than 15,000, there should be PT threshold above there. So until 21,000 you need to pay the PT. If it is so, based on the state, these rates will change. Okay, so we'll see. Every employer should deduct salary from your PT from your salary, and including government employees and private employees and whatever, and they will pay that PT to the government. Okay, and also professionals. Who are the professionals? Doctors, CS, lawyers, chartered accountants, architects, engineers, who are not paying, not doing jobs, I mean not under salary employees, but they are doing their own business. They are also covered under this act. So they need to enroll professional tax enrollment certificate and pay professional tax directly, even though they are not under employees act. They need to, I mean they are not under the employer and employee agreement under any company, but still they need to pay to the professional tax to the government. And also business or trade, even if you have any partnership firm or proprietaries or directorships in the company and also doing business, so all these proprietors, partners, and any directors of the company has to pay professional tax under professional tax enrollment certificate. There will be two certificates in the professional tax. I will tell them in the later part of the video, but I will tell who will cover in this professional tax, and then we'll see what registration has to take once they covered. Okay, and then companies and LLPs, this is the major important point. Generally we assume that professional tax will be PT will applicable to the salaried persons or the business guys or professionals, but under this is not stopping here. It is applicable to companies and LLPs also. If any companies are separately liable for the PT registration, still some states each director is separately enrolled. LLPs also treated as company in the so many acts. So all these companies and LLPs and partnerships, they has to take the PT registration under PT enrollment certificates. Okay, and then freelancers and bridge workers, depending on the even though they are independent contractors, they must enroll for the PT enrollment certificate. They are not for the PT registration certificate. They get PT enrollment certificate. Exemption by state. Always check respective states. See, all these PTACs are by state wise, so we need to check their state laws how it would be. There might be some minor changes. Majorly they will collect 2500 from most of the states who are not liable for the PT. When they are the armed forces, if you are working in the army, navy, or air force, are exempt from the free PT in across all states. And also threshold is below threshold, income is below threshold limit. So if say suppose few entities mention 15,000 or 21,000, few states mention their PT limit either 15K or 21K or up to 50K, whatever it is. Based on states, it will differ. So if it is minimum income, not below the minimum threshold income, so that their PT would be nil. They still reach, but their PT would be nil in this case. And widows and divorces. So several states like Maharashtra and Karnataka will exempt PT for widows or divorces or women who certain incomes getting from the range of PT. And also physically handicapped persons. So this is all. These guys also not need to require to pay PT registrations. And persons above 65 years. Select some states. So Maharashtra are exempt who are exceed their age by more than 50. And the agriculturist, pure farming income. It is solely related to their income is solely related from agriculture. This they don't need to pay the PT. But apart from these cases, everybody has to register the professional tax. Either you work as an employee, or you work as your own business, or you working as a director in a company, and either directors either in companies and also in freelancers. When if you working for the corporates also, I mean more than one entities or multiple entities as a freelancer, so you still need to register another PT tax. So some major states slabs I have given here. If you are related to Maharashtra state, so we'll see the Maharashtra up to 75,000, 7,500, it is nil PT, and 7,500 10,000 175 per month, and more than 10,000 the limit has been 200 per month, and for February month 300, because maximum PT can pay per year 2,500 only. If you multiplied with 2, only 2,400 will get it. So 1 month, that is in February, we need to increase that 100 and deduct total 2,500 per year, and employer must deduct this monthly, and February always 30,000. This we need to pay by within the due date of the next month. Okay. In the Karnataka, similar features are there, but they did a cap up to 25,000 nil. More than 25,000 to 30,000 150, 30,000 to 50 200, and more than 45,000 200 per month, and also maximum due date is the next 20th of the next month. In AP and Telangana, up to 15,000 nil. 15,000 to 20 150 per month, 25 20 to 25 150 175, more than 25,000 200 per month, until February will be 300, and also maximum would be 2,500 for each state. Like this West Bengal, up to 8,500 nil, more than 8,500 to 10,090, and then up to 15,110, more than 25,000, up to 25,130, more than 25,200, and still yearly would be 2,500. Most few states are not deduct PT under their state tax. Example: Delhi, Uttarakhand, Rajasthan, UP, Bihar, Jammu and Kashmir, Sikkim, Himachal Pradesh, Mizoram, Nagaland. These states, especially these states, are not levying PT as of now. So employees who are working in those states are not liable to pay PT. And then if you observe the Gujarat, till 6,000 nil, more than 6,000, and till 9,000, below 9,080, and then up to below 12,050, and then more than 12,200. The maximum cap would be 2,400. Here we don't need to pay extra and 100 in the Gujarat state. Okay. And this Tamil Nadu also, we have similar limits up to 25,000 nil, and more than 21,000 31 35, and this, and then maximum we need to pay 2,500 per year. but they need to pay only half yearly only. By above 7,500, they will deduct half yearly PTs. And then Madhya Pradesh. These are the limits in the Madhya Pradesh, and these are the limits in the Kerala. You can go through this. I'm just holding screen for you. So under these two states also, maximum limit would be 2,500 only. And then what are the PT registration certificate and also PT enrollment certificate? Who are working as an employees, they don't need to take the registration certificate, because employer can take the registration certificates on behalf of them, and they will deduct from their salaries, and employer is liable to paid PT like TDS, and companies and firms, even one employee has to take this kind of arrangement, and registration must be with the state authorities. Filing would be monthly returns and annual returns. Penalty and interest are involved if you don't take the registration. And but this is the important. If you are not a salary employee, you need to take a personal enrollment certificate. Even self-employed professionals or businessmen, whoever it is, you need to take this registration. Even companies and everyone has to take this enrollment certificate separately. Even the corporates and all, they need to take enrollment certificate separately. This is PT registration certificate is for deduction of the employee, deduction of the PT from employees and pay to the government. And this is for company and for self-employees and for businessmen, whoever it is, do not have any employer on their head. So they need to get that PT registration enrollment certificate and then pay PT to the state governments. So personally, the purpose is to enroll and pay the PT on their own incomes. Liability would be on personal. There is no employee for them, so they need to pay it. Generally, it applicable to CS, doctors, lawyers, traders, and consultants. Registration should be on the self basis. Payment should be half yearly and annually based on their states. The penalties and late payments also involved. See, if you are an CA or doctor who also employ staff, then you need to take both registration. As an employer, you need to take registration certificate, and as an professional income, you need to pay the enrollment certificate. So separate certificates, separate payments has to do. So this is the criteria of the registrations. And pre-registration process is a very simple process, as we checked earlier also. They will collect the KYC documents and apply in the offline or online, and upload few documents, and we will receive the PT registration number and start deducting the PT. Here also same. There will be state-wise portals are there. You will fill those enrollment form, upload your identity form, and enroll, get certificate, and pay PT. All these are regular steps only, but registration timelines would be different in each state. In Maharashtra, it will take 7 days, 15 days. Telangana is 5 days. So based on the state, it will take within 1 month, maximum 30 days. You can get the PT registration. There is no much time will take there. So these are the due dates. In monthly payment dues, last day of the month has to pay. But in Karnataka, you would pay within 20th. In Telangana, you need to pay by 10th of the next month. Or Andhra Pradesh also you need to pay. But in West Bengal, by 21st of the next month. So monthly returns, this is by 20th, 10th, and the last day of the return. So in Maharashtra, there are few different due dates, and in Telangana, some different dates. So each state there would be a different uh, dates and due dates for annual returns also. Even in the annual returns also, you need to uh, file by 31st of the each month, and 60 days before end of the year end in the Karnataka, and 31st March in the Maharashtra, like this. And the employees is less than 5,000, they should pay. Sorry, if employees in that organization is less than 5, then you need to file only annual return. And penalties, if it is in late penalty, 1.5% or 1% in the each month based on the state. The late return, 1,000 per month, 500 for quarter. So if you see the Telangana, there are different penalty system, and if you see the Maharashtra, there are different penalty system. Few are same and few are not. So uh, you need to check whether we are deducting employees on the correct slabs, and deduct pay from the salary would be become payable. And also create the challenge by state wise and filing the monthly returns, and after the and in the year end we need to file the yearly return also. And then how would be the penalties? Either professional tax registration holders or professional tax enrollment certificate holders. Even there would be small differences, but most of the penalties are same. See, suppose penalty is 5 rupees per day for the default in the Maharashtra for the non-registration. Here for non-enrolled is 2 to 5 rupees based on the states. And also delayed payments 1.5% interest. Most of the states charges to 1 to 2%. Here also same. And failure to deduct from the employees, employer will personally liable to undeducted VP. So state can recover from the employer regarding of the, even though say suppose few employees are worked in 3 months and they left from the organization. If for these 3 months, if you don't deduct the TDA professional taxes, later if the department identified, so they don't search for the employees who left from the organization. They will collect from it from the employers who deducted for in the 3 months. If you don't deduct, they don't bother about it. They will collect from you. This is what the intention. The understatement of income still, if you understated any income, say suppose your income is more than 50,000, but you still showing that only 15,000 to exempt the PP. If they find it, no, they will definitely recover with the penalty as well. So late filing for monthly returns, these are the for not made for not registrations. If you're not filing the monthly returns, even though they will pay 1,000 or 2,000 per return, varies on the state by state. Here also they will not, monthly returns are not required because these guys are only file the annual returns only. And non-complying of annual return, there would be similar penalties, but limit has been increased. And false or incorrect statement. If you did any false statement or incorrect information to the PT governments, if they find it, no, they will prosecute the respective authorities and the penalize in equivalent to PT avoided. Okay, there would be appeals and everything. Procedures will come. So I hope you understand this penalties clause also. But this is not a major changes from the other acts. So it would be same for the most of the acts. There will be minor differences. And then PT and income tax interaction. Of course, they will, once you pay the PT, that is exempt from the income tax. So your salary is 2 lakhs. I mean your salary is 2 lakhs per month. Every month they will deduct 200, or your salary is 1 lakh per month. And if they deduct 2,200 and 99,800 will come. So this 200 is directly deductible, and yearly 2,500 is deductible in most of the states. So that is exempt from the tax. So apart from the standard deduction, you can get the exemption for this 2,500 also. So you don't need to pay tax again on this 2,500 because it's already tax, professional tax itself. So you cannot pay 2 times tax anywhere, either indirect or indirect. So this is how the system has been. So where PT appears in salary structure, it should be in Form 15 has to be disclosed separately. In new regime, they have an standard deduction class and still 75,000. That is different from this professional tax. This is still additionally benefit to the employees. In Form 16, they should definitely disclose this PT, and this is the practical example. Your gross salary is 6 lakhs, so deductible under is 50,000. After even though if you paid the standard deduction under so and so act, still under income taxes, still you need to deduct PT. So say like 6 lakhs annual income, 50,000 for standard deduction, 2,500 for PT. So net on this only your income tax will calculate. Employers PT's expenses. One employers who are paying for PT enrollment certificate for their applicability of this session, so they will deduct this as an professional income, another one deductible business under the professional gain or losses. Also, PT is not refundable if any excess. If you paid any excess PT, it will not be refundable to the state authorities from the state authorities. So I hope you understand this standard. So we have completed these slab rates, digital filing, new exemptions, wage hike, and everything. So in 2026 they changed few slab rates. So new slab rates would be 20,000 instead of 15,000. They increased slab to 25,000. So few employees will exempt from the PT after it effective. So it's already effective from the actually. And then Maharashtra also, they have women's and widows They have given some exemptions. In Karnataka, digital filings only available. So these are the state amendments recently in 2026. In West Bengal, 100% digital payment only. So they don't need check payments there. In Andhra Pradesh, they did a one single window for PT registration and labor well wages fee wages fees. In Kerala, the slabs are increased, and there is a proposal in Kerala. It's still not there. And EPF wage ceiling limit to PF threshold limit change will be in all states is applicable. More employees crossing PTEC slab once EPF ceiling hits the 21,000. So like that. So this to streamline these PT and PF acts, they are impacting these changing their threshold limits to PF limits. So new regime PT deduction is retained. So PT deduction available under the both old and new regimes. So most of the states linked with that. So these are the major changes in 2026 for the PT related act. So there would be limit changes and the new portal improvements. All this. This is the quick revision. It is a state tax, not a central tax. So there are two registrations: professional tax registration and professional tax enrollment certificate. You know the difference now, and it is a standard. And the maximum cap is 2,500, and the employer has to liable for the employee's part. And it is a maximum deduction available for income tax. All states are not levy PT. There are some exemptions. There are exemptions in few states, and also online filing is mandatory in most of the states, and penalty is same year and the same in any of the states. Thank you for watching this video. So if you feel we are putting efforts to understand concepts for your growth, please subscribe to us and share this video to the relevant persons who required in your field, so it helps to them and for us also. Thank you for watching. Keep please subscribe for more updates.